All right, you do not pay tax on Social Security if Social Security is your only form of income. All right, we're going to go over this once and for all, solve it for everyone to see forever and ever and ever and ever. All right, so hang on tight, put your seatbelt on, because what I'm going to share with you is going to shock you. All right, so let's dive into this. We're using Right Capital software, as I always use. We got Bob and Jane sample up here. And the nice thing about having a sample is that I can manipulate any way I want. And what we're going to show you here is we're going to show you on the profile for Bob and Jane. And we're going to go in here and we're going to say they are both 70 years old right now. They're both 70 right now. They have no net worth, none. So we go to dashboard, we'll see no net worth. They have nothing other than we can say they own a house, but that's it. So they have no net worth and they have no income other than Social Security. Their only income is Social Security. And we are going to say they both will receive the max with delayed earnings credits. So here is their PIA. That's the benefit they would have received at their full retirement age, their FRA. So the PIA, the primary insurance amount, is the amount you receive at your full retirement age. I was born in 1970. My full retirement age is 67. If you're born in 1960 or beyond or later, your full retirement age is 67. Full retirement age will be the PIA is the primary insurance amount, the amount you receive at your full retirement age. Hope that makes sense. But notice, they're not going to receive $3,100. They're not going to. They're putting their PIA in. For those of you who have software, by the way, make sure you understand this. Do not put the amount you're going to receive in here. That doesn't make sense. You put your PIA in here, and then you put the filing age, and the software will calculate it for you. So again, their PIA is $3,100, but they're not going to take their benefit till 70. So essentially, their benefit will be about $4,000 a year, because it'll be calculated with an 8% delayed earnings credits. I see so many people making this mistake. They'll put, they're going to take it at 70 and they're going to get $4,000 a month. I said, no, you got to put your PIA in here, monthly full benefit amount at PIA. I wish it'd be a little bit more explicit here, because a lot of people don't even know what PIA stands for. All right, but anyway, so we're going to say that old Bob made the maximum benefit for Social Security, thus his PIA is $3,100, which is the maximum you could have possibly made, without question. That's the maximum Social Security benefit at your PIA, is $3,100. And we're going to say Jane had the same thing, $3,100, but they're both going to take it at 70. So for whatever reason, between 67 or whenever they retired until now, they didn't take Social Security and they spent all their assets. So now they're just living on Social Security. That is it. They're just living on Social Security. Hope that makes sense. So actually, pause it real quick. I'm going to show you something here. Actually, let me just keep going. Now I'll come back and show you something else. All right, so I hope that makes sense. So now that's it. That's their only income they have. That's it. And we're going to say they have no expenses just because we don't need to have expenses here. We're just going to show you, the whole point about this video is to show you that if Social Security is your only source of income, you pay no income tax. All right, so let's go to tax. We're going to show you the tax thing here, and you're going to see there's no tax from 70 to 79. Now, we'll show you why there is a tax here. This is what I want to kind of go back and forth to. I was going to show you how that doesn't have to be, but we'll get in that in just a second. And we can see no tax, none whatsoever. And why? Well, if we go to retirement, we'll show you here. We're going to go to cash flows, and we're going to show you the good old-fashioned tax table. Their income flows, 72. 100,000 a year. Where's that coming from? All from Social Security. Look at that. 50,282 each, because they have 3,100. I don't have my calculator. Man, I left it in the other room. They have 3,100 was their PIA. Times that by 8, or not times that by 24%. You increase that by 24%, 1.24, because of 3 years delayed earnings credits plus cost of living adjustment of 2.4%, and they're each making 50,000 a year in Social Security. All right, that ain't too bad. In fact, I'm telling you, it's easily doable. If your maximum full benefit at the PIA is $3,000 a month or so, and you wait until you're 70, you'll have basically $4,000 a month. That's $48,000 a year of Social Security. So if we look at that, and then we go back to summary, we see their tax payment is a big fat goose egg. Now again, we'll get to what's going on down here in just a second. And if we look at the 1040, we're going to go to tax. And we're going to actually look at the 1040. We'll start with 2021 just for simplicity, they'll say they have $100,000 of Social Security. Only 11,000 of that is subject to is part of their AGI, but their standard deduction is 27,000. So you can see line taxable income, line 10 is 0. They got no taxable income at all, which means line 15, total tax, nothing. So line 15, total tax is 0 because taxable income is 0. Why is their taxable income 0? Because their AGI is right here, $12,000. $12,000 is well absorbed by their standard deduction. They pay no taxes on Social Security. Now, if we fast forward, we'll say till 2030, they do have a little bit of tax, and the reason for that is, I'll share in just a second, it's $473 in tax. The reason for that is because we have them earning taxable interest of $6,120, and this will give them a tax torpedo. Why do they have taxable interest there? Well, I'll just go to show you here, and this is I'll share with you just a second how we can, I'll show you just a second. So let's go to cash flows. They get taxable interest because these net flows, they have no expenses. So their net flows are negative 100,000 or positive 100,000, positive 102, which means it's all being added to this taxable account. And if we go to additions to accounts, that's being, you can see they're adding 100,000, 102, 105, 107 because they're not spending any money. That's just what I've shown you here in the software. Because they're not spending any money, they're adding those additions to the accounts. So now their taxable accounts 400, 500, 600, 700,000, and they're getting a little bit of interest off that. But if we go and create a expenditure, let's just say expenditure of savings here, and we're gonna have them spending $8,300 a month. That would be $100,000. Watch this. So now we'll go to taxes. So now they're spending basically all their money coming in is going out the door, and you can see there's no effective tax rate, none whatsoever, because they're not saving anything. Because now they don't have positive cash flows. They don't have surpluses. They have basically the money they got coming in is going out the door each and every year, and you can see here they have basically got net flows of negative 1,000, positive, and a little bit of net flows, but not enough to have any income taxes because their only income is Social Security. There's no other taxable income. And if we go to the 1040, we can see here, let's go to details. We'll go to 2030 taxable income, and you can see $124,000 of Social Security benefits. Only $21,000 is subject to taxation as an AGI, adjusted gross income. You take away their standard deduction, and then 2030, you're going to have a personal exemption again. They call this QBI. Hey, buddy, Pablo came in. Pablo, the like button, please. There he is. He wants you to. Pablo says, remind them to paw the like button, Josh or Dad. You got it. All right, so you got 24,000 of Social Security. Only 21,000 is subject to taxes, but because of your personal exemption of 10,118, even though here it says qualified business income, QBI, it's not a QBI once the Trump tax bill goes away. Plus your standard deduction, you have $28,000 of deductions, of standard deduction essentially, and only $21,000 of AGI, which means you have no tax, and that will be like that forever. So if we go to 2040, it's going to be the same thing. I guess they're not living in 2040, so we'll just have them live until 2039. 154,000 is their gross income from Social Security, of which only 34,000 is subject to taxation. But they have 34,000 of deductions and write-offs, which means they have no taxable income at all. No taxable income means no taxes. Anyway, so that's proof right there, man. I mean, just there's people can argue this until they're blue in the face, but we'll just go and we'll show you right here. Oops, not right there. We'll go to tax estimate. There it is. There is no tax whatsoever, none. The proof is in the pudding. If Social Security is your only form of income, you pay no tax. It's just that simple. Love to hear your thoughts on that. If you disagree, you're going to have to come up with a reason why, because you're wrong. All right, we'll see you guys.